Good morning, traders. Chris Buss here with your morning look at markets for Wednesday, May 26th. Taking a quick look at futures. Equities are more or less flat, up about 0.25%. Copper's up 0.4. Gold's up 0.5%. Silver along with it. Oil's flat on the macro front. Very quiet day. We've got oil inventories at 10:30. I didn't really see much else. We do have a packed earnings session after the bell. We've got NVIDIA, Snowflake, Okta, Workday, Nutanix, Digital Turbine. So there's a lot of names after the bell in tech, and I think that's going to be interesting to look at. Not only, I'm sure NVIDIA is going to blow it out of the water, but like everything else, got to see how the earnings reaction is. If it's, are the earnings faded? Are they embraced? That's often a good tell on risk appetite, kind of where we're at. What I want to do this morning, yesterday was a very quiet day, so not a ton to go over on the indexes and FATMAAN names. So I'm going to quickly go through some other things here this morning. I want to touch base on the oscillators, find out where we're at. I want to look at bonds and bond yields, Bitcoin, gold, and then get into our regular stuff, being the indexes and FATMAAN names. So touching base on the oscillators, remember these oscillators give us heads up when they're overbought or oversold, letting us know, hey, the risk reward down here at oversold, the risk reward for being short is very much diminished and to expect a bounce. Likewise, at the top of the range, overbought, time to peel back some of your longs, etc. Right here in the range is nothing. There's no signal there. So we're in kind of a neutral state as far as momentum goes. And here is the Nyse Oscillator. NYMO is for the NASDAQ. So back on NYMO, very much the same thing. In the middle of the range, nothing to do, no signals, but knowing where you're at is everything versus, getting overextended or getting oversold. I mean, if you're in the middle of the range, that's also information as far as, positioning. There's nothing, at least by these measures, nothing inordinately out of whack to be cautious about. So moving on to yields, I think there's a lot going on. It's been so critical to the tech trade and the cyclical trade. We saw a peak of 1.75% on the 10-year just a few weeks ago. We backed off that. We came up for another try at 1.69%, and now we've backed off to 1.56%. And I think the real key here is for yields, this 1.5%. If we were to fall below 1.5, there would be some real question as what's going on in the economy. If we had flipped from, oh my God, inflation, we're going to 2%, blah, 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 versus dropping below 1.5%, the recovery would kind of be in question, going from overheated to falling yields. There would be a definite disconnect there. So we've got a big 7-year auction tomorrow, and then we've got, of course, in the early June, we'll get a whole new rack of macro data on employment and inflation, etc. And so that will be a big driver here on 10-year yields. Looking at the TLT, we had been talking about this 50-day moving average in green. What I went ahead and did is box in this trading range that we've been oscillating in for really since March. We had an excursion below here. That's that yield peak at 1.75%. But since then, we've been bouncing inside the box. Now, yesterday, we took out the 50 EMA, which I thought was important. Why? Because the declining 50 had contained TLT the whole way down, and now we've broken above. So I think a real important point is right here at 140.25, let's call it. If we were to break out there on TLT, that would be commensurate with a yield breakdown below 1.5%. And so that will be a region right here that we're going to want to watch really carefully. Is it a place to fade, or is it a place to get long? Because see, we've got the 200 up here at 146. That would, from a technical standpoint, be a logical target if we break out here. So that's going to be really important. And remember the linkage. Falling yields benefit tech and the bubble stocks, and falling yields are a headwind to the cyclicals, right? The banks, the reopening trade in general. Because if yields are falling, what's going on in the economy? Why are yields falling when we're supposed to be ramping up activity? So that's going to be the linkage between TLT and equities. Even if you don't trade it, you should be aware of what's going on. Quick look at Bitcoin. I changed up the chart just a little bit. I dropped in the Fibonacci retracements from this swing low down in October to the swing high at the top. And you can see we are right in this range of the 50% halfback, and we actually got a touch down here of the 618 retracement. And now we're in this range between, let's just call it 35 and 30. We've got two relatively large volume over price bars here. So just from a trading perspective, I think bulls need a breakout above 35 on GBTC to get some momentum going. That would take out the 200-day in this trading range. But if the bears can break 30 on the downside, I think they would have some momentum to come down here and back test the low and back test this low and this touch, and then that would become a very, very important part or point on the chart. So I thought it was interesting yesterday where price popped up above the 200 and then failed, being down 5%. Gold had a good day yesterday. It was really probably the thing I was looking at the most, since equities weren't really doing anything. Price was up almost 1% on GLD, and you can see it's starting to get this parabolic look, and that's, I mean, it is what it is. I'm not going to say I don't want it to go higher, but whenever you get that, that steep look on the 8-day, and you get this large separation between the 8 and 20 and the 50, it's getting extended. So, be careful. And it's hard to say not get long, but it's a risky place to get long here, and you got to really be on top of it. But we do have some tailwinds working, and I put these here just for reference. And this is just a macro kind of thing. Falling dollar and falling real yields are tailwinds for gold. And we've had that scenario now for several weeks. The dollar keeps falling, and actually I want to show you the dollar real quick. Here's the dollar chart. We have been falling. There was a kickback rally, and now we failed this 90 level. And so the really big level is this 89.25, and we're grinding our way down towards that level, and there'll be a big test there. Is it just a double bottom where we bounce back up, or do we consolidate there for a while and then break below? But as far as gold goes, 179 on the GLD chart is the next target. And if you're looking on gold futures, there's a resistance level at 1922. But you get above 1922, and then you start getting some real running room, possibly up to the the prior highs that we saw last. It's been a while. Last August was the prior high. So way back in the chart. So we've got that to look forward to. One thing that was disappointing yesterday was the gold miners didn't really react. I'm long Kirkland Lake. I'm long Newmont Mining. I know a lot of you are long the Basket, GDX, or some other names. I don't know if that was a signal we're not buying it, or if it was just an anomaly. But you would have expected the miners to have a better day than they did. And you can see here they really didn't do anything. We've got an impulsive move higher and a little bull pennant here. If we can pop 39.50, push up towards 40, then I think you'd have some running room up into 141.50 and even beyond, depending on what gold does. Notice here we're in the bullish regime for momentum and RSI. Not overbought on RSI, which is nice. There's still room to press higher. Same thing with momentum. So that's kind of how we stand on more of the macro front. Our oscillators are neutral. We've got a falling yield environment, which has put pressure on IWM. Been a little tailwind for tech. And we've got crypto trapped in a little range, Bitcoin that is. Ethereum had a better day yesterday and was green. And then we've got a tailwind environment for gold. So before we get into the meat and potatoes of the indexes and the FATMAAN names, I want to thank any new viewers here. Appreciate you spending some time with me. I work hard every day to set you up with some good levels to get objective trades on. If you think that's going to help you in your trading, please subscribe and hit the alarm bell. You'll get all my content. Then you can look over in the show notes for a couple of links there where you can visit the website. There's a lot of helpful articles posted there, and I'm adding to it all the time. And there's also a place to register for everything that I do at tradersprofitcompass.com, and I encourage you to do that. Longtime listeners, thank you as always. Pass the link along, hit the like button, give me a positive comment, let me know not only how I'm doing, but if there's any special content you want me to hit, let me know, and I will be happy to get that done. So let's look at the indexes SPY. How to look above 420, came back and tested 418. We had those levels totally mapped out. nothing day, as far as, pivot points and all that. Our pivot today is 418. I think you can be long anything above that. A breakout above 420 would be a place to add, or if you weren't long, to get long on the breakout and then look for 421.50 and 422.50. Here's the exploded view on the 30-minute chart. You can see the fake move here. And, when you're trading, just a reminder on TA principles, fake breakouts are never good. Doesn't matter if it's on a 30-minute chart, a weekly chart, a daily chart. You don't want to see these moves if you're a bull. You don't want to see these, big candle breakout. That should be good to go. And then when you retreat quickly, that was a vicious 15 minutes. If you remember yesterday morning, big impulsive spike, and then they just slammed it, brought it back down. That's a bearish move, fake breakout. And so whenever you have a fake breakout like that, it leads you to believe that we're going to pull back to a level. And in the beginning, what it was just a backfill of the gap open, but then it came all the way back to a pre-identified level of support there at 418. And so that would have been a logical place to get out of your shorts. If you had been lucky enough or good enough to get short on this move, it didn't amount to a lot of money, but you never know that in real time, right? So this would have been a place to cover if you had been short anywhere in here. And then today, 418 is your new pivot. Long above. If we break below, it favors a test of this gap at 417. Same idea on the Qs. We had a reach up, came up to tag this, almost got to 335, then came back and just, did nothing the rest of the day. You can tell from these candles when you've got wicks going down to touch a support level, that further validates the level, right? Keeps going down to support, tags it, then they bounce it a little bit, comes back down, the next candle tags it, bounces. You can see that here on the 30-minute chart, all those back touches of 332. So that validates that level as, real, having validity, strengthening that level in terms of importance. So today, just as we said yesterday, you don't want to see 332 break, because then you're coming back to 330 probably almost instantaneously. That would probably be a flash move. And then 330's got to hold, or we come back to test the gap below. That's not my base case, but my base case is, a grind higher, make a move up here to test 335, where we tested yesterday, and then 336 is a really big level. So be flexible in your thinking. 332 is a clear pivot, and just react off that. If you got long from down here, just continue to ratchet up your stops depending on your time frame, and make sure part of your plan is getting paid, right? That's the whole idea. So ratchet up your stops or your strikes to make sure you get paid for this move that you were good enough or smart enough or lucky enough to get. IWM had a poor day yesterday, down 1% when everything else was kind of dormant. We had identified this 222.50 as being an important level. It had rejected there twice, And yesterday we had a big fake breakout above, and then the rest of the day we went down. So just jumping over to the 30-minute chart, we had talked about all the turbulence in this area here, a lot of congestion, a lot of baby moves, baby rejections, back down to support, back up again. That can be some choppy trading. If that's not your thing, I don't blame you a bit. You can get chopped up in an environment like that. But now we're below. I think the bulls really need to reclaim 220.50 here. If price can do that, you've got a level of resistance here at 221.50, then here at 222.25, then there's a lot of overhead here, 223, 224. So a lot of wood to chop there in IWM, but I would tell you, if it breaks 219, then 218 and 217 are in the cards. And if you got a back test of 220.50 that failed, that would be an objective level to try a short, because if yields keep falling, there's going to be pressure on IWM. Remember all the banking and cyclical names that are in IWM, those aren't going to perform in a falling yield environment. FATMAAN, Facebook has been the strongest. Had a good day yesterday, jumped up to a new level of support here at 326.50. I think that's your pivot for today. Look for 330. Any pullback below 326.50 opens the door for a back test of 323.50. But Facebook still looks strong. Apple, we talked about 128 as being an important level on the daily chart. I have went ahead and made a little note here reminding you that 128 is the convergence of the 20 and 50 EMAs on the daily chart. And so that's why, part of the reason why this has had trouble here at 128. And once we had that fake breakout, we came right back to this level of support that we've had. And so now, depending on how active a trader you want to be, you can be long against 126.50. You don't want to see that break, or you could come back in here to 125. As long as it holds 126.50, your target's 128, and then above 128, I think you would start to see some more vigorous upside, because that's a big level. You take out the 50, the 20 and the 50 on the daily chart, that should give it some real positive momentum. And then 128 can be your solid support as this resistance level flips over to support once you break out. Tesla didn't do anything yesterday, along with a lot of other stocks. No change in the technical posture. Stay long against 595 and see if we can find 625, 630, 640, where you'll start to run into some overhead resistance in that little $15 band. There's a lot going on in there. So if you got long anywhere along the way, 595 is what you've got to hold. Microsoft didn't give anything back yesterday. We are right here at this. We filled a little baby gap. If you remember yesterday, there was a $1 gap between 251 and 252. We filled that. We had a fake move up to 253, came back. And, we pointed that out on other charts where that resulted in a sell-off. Here, it didn't. It just consolidated. So that in and of itself is a bullish outcome. Usually on that fake breakout, you'd see a sell-off, but that didn't happen. So it's hanging tight right here at 252. I think you can be long above, looking for 253 and 256. If for some reason, we pull back away hard, your first real area of support is down in that 248.75, 249 area. And if you got that pullback and you weren't involved, I would certainly give that a long try right there at 248.75, 249 area. Amazon, fake breakout, came back quickly, lost 32.50. And so if you were active in the free 50 club, meaning you're getting long or short on these $50 increments, that was a sell signal in and of itself. And you got a flash move down to like 32.15, almost made it to this gap, and then it reversed quickly and made a big comeback. So there was, even though at the end of the day there was nothing that happened, technically, we still have a pivot at 32.50. There was, quite a bit of movement intraday, just depended on how active or nimble you wanted to be and if you were focused on it. Nothing more than that. I have put a note here that just like Apple, we've got a convergence in a very narrow band right here at 32.50. We've got the 8, the 20, and the 50-day EMAs all bunched up here at 32.50. So if we could get like a convincing move up above that level, those of you that are interested in more of a duration trade, looking out over time, that would be a good time to do it. You could even do it now and just stay long against 32.50 and setting a stop below. That would be perfectly fine as long as you're willing to, commit to that level. For me, I want to see all that stuff ticking out. In the whole scope of things on Amazon, $50 is nothing, right? If you can get a good spot, even if it's 3,300, knowing that now you're above the 8, the 20, and the 50, that's pretty powerful, and that would open up some running room to the top. There's still going to be resistance levels, of course, but knowing that you've got that support underneath you with all the EMAs as that support level, that's comforting in a technical sense to know that is there. And 32.50 has become a very important level on Google, on Amazon. Google, decent day, all things considered. Notice the reach up where it almost got to 23.90, came and backed off, but didn't sell off. So now, no changes technically. Stay long against 23.50. Look for a move up to 23.90, and then a breakout there. You're going back to 24.90, 2,500. Strong move, strong chart. Taking back level by level, not giving anything back. That looks good. Netflix, nothing, but it did what it had to do, held 500. You can stay long against 500. Look for 507.50, then 515. We talked about yesterday. This looks a lot like a flag. Flagpole up, consolidation at support. I think you can be long here against 500, see what it does. And like any pivot point, you don't want to see that break, because then you're back to 492 and it looks like a failed move. So from a technical standpoint, bulls really need to see that hold. And then wrapping up SMH, we talked about this 242.50 as being a key level. We broke through that the other day. We had a little move up in the morning, but just like Microsoft, that move, all it resulted in was backfilling the opening gap, and then it stayed strong throughout the day. So that in and of itself is bullish. Didn't even come back to 240, 250. That's the only line that matters right now as far as the bulls or bears are concerned. As long as 240, 250 holds, I think you should be looking at 247 in this gap here to 250. If 240, 250 fails, then you're probably coming back to test this gap here. And remember, we've got NVIDIA after the bell. So I don't really expect, with that being after the bell, you might just see oscillation here. Maybe there's a run up in NVIDIA today into the print. That could move SMH. But just remember, if there were a catastrophe on NVIDIA, it'll move this after the bell. So I don't think it's anything to worry about. I wouldn't exit my position here because, oh my God, there's NVIDIA after the bell. Just know you might see some aftermarket volatility in SMH tied to that NVIDIA reaction. But as long as you're above 240, 250, I think you're fine, and look for higher prices. So also, don't forget, in case you weren't aware, they announced a 4-for-1 split last week. The shareholders are going to vote on that at their next meeting on June 2nd, shareholder meeting. And then, I'm sure they're going to approve it, and that's usually been bullish for stocks in general. So we'll see what happens, and I'm sure on the earnings call there'll be, commentary centered around that. So if you're interested in that, you can listen to the call or look at the transcript tomorrow. So, okay, let's wrap it up here. I hope you found the information helpful. Have a great day of trading. Let's see what happens, and then we'll react accordingly. So respect your levels, respect your stops, and I think everything will turn out fine. So as long as you do that, you can't really get hurt. Take it from me, when you ignore stops, that's when the pain starts, right? So make sure you respect your stops, and let's see what happens. So have a good day of trading. This has been Chris Best with Trader's Profit Compass. Talk to you next time.